Should I be locking in my mortgage? Will interest rates continue to rise? And if I drop my mortgage, will interest rates drop down? These are some of the hardest questions that people in the real estate space and financial space are facing today, and one of the most common questions that we're all hearing. To be honest, right now, we don't know, of course, the answer. We don't have a crystal ball, but we'll be able to provide you as much information in today's video that's going to be able to give you much information to show you where things are headed in this current time. In this video, we're going to talk about if it's now the time to lock in your mortgage or time to look into getting a fixed mortgage if you're getting closer upon renewal time. But before we go any further, remember to help us out and hit the like button, hit the subscribe button, hit the notification bell to updates on newly uploaded content. Josh Tavares, investor, realtor with the eXp Realty Brokerage. And if you guys are looking to invest in real estate with great cash flow, great appreciation in the US with little involvement, book a call below. Let's partner together and help grow your real estate portfolio. And also, if you're looking to buy real estate, invest in real estate, sell real estate anywhere, it doesn't have to be in the Greater Toronto area, it doesn't even have to be in Canada, please reach out. We are a borderless brokerage essentially because we all work on the cloud with eXp Realty. So we'll be able to get you in touch with real estate agents all over the world, whether it's in the US, South Africa, Israel, Greece, anywhere in the world, we'll be able to help you out. So if you have anyone who's looking to do so, please reach out to us. Let's get into it. We've essentially seen interest rates go from 0.25% to above 3%. It's something we haven't seen in quite some time, and it's making a big stir in the financial space and real estate space. Let's get into it. We've essentially seen interest rates go from 0.25% all the way to above 3%, and it's the largest increase that we've seen in quite some time in only 6-month time frame, really making a big impact in the real estate and the financial space. It appears that the Bank of Canada is going to continue to raise interest rates all throughout 2023 and maybe change their mind and maybe drop a little bit in 2024 to combat high inflation. But there are some data points that we have to look into to see if it's now the time to lock in your mortgage, to go with a fixed rate. Is variable not the way to go for the next little while? So we're going to cover that more throughout this. And there's going to be a huge caveat to this because essentially we don't have a crystal ball. We're not forecasting. We're essentially looking at the information that we've been presented, information that we've heard from the Bank of Canada, essentially where they're going about in terms of raising interest rates and where we're going with everything as such. So essentially, we're giving you as much information as we personally can based on what we have at this current present time. In a nutshell, it's going to really depend based on what your risk tolerance is, what you're able to condone at this current time. And right now, it does look like variable interest rates are going to continue to feel the burn and continue to raise, especially the ones that are variable with fixed payments. Now, you will have a higher interest rate that you will have to pay off over time, or it'll continue to build interest on the interest. So that's something you want to keep in mind of, and how it can actually impact the real estate space depending on whether you're looking to buy, sell, refinance, invest, flip, whatever it is this current time. Let's get things started with the government's 5-year bond, which essentially is used by banks to go about pricing their fixed rate 5-year mortgages. The 5-year government bond typically does work in terms of the same rates alongside the Bank of Canada, but it is independent, and at any point it can change. And like I mentioned, it is a way that banks go about pricing their 5-year fixed term mortgages. And if you're taking a look at this chart, you can see in 1 day standpoint, it can be very volatile. It can go from 3.33 to 3.44 and continue to go up and down depending on how the market is performing. This essentially means that if you're seeing a 0.1% increase in the 5-year fixed rates alongside with the Bank of Canada, you can easily see a 0.1% increase today as it speaks if you had to get a new mortgage. And as we take a look at this chart, we can see that over the long term, it can fluctuate very quickly. And if you compare it to the overnight lending rate of the Bank of Canada, you can see they don't move very often. And when it does, it tends to move on a monthly basis where you're seeing rates rise on a monthly increase. By looking alongside the Canada 5-year government bond, you can see that it fluctuates quite a bit, especially if you're looking for the time frame between 30, 60, and 90 days. And going back to April, we've seen the percentage go from 2.46% all the way to 3.6%. Then it came back to 2.6% in August and went all the way back to 3.43%. And this chart is really helpful because if you start seeing the numbers rise, that means you're probably going to see the 5-year fixed mortgages go in the same direction as well. Because we see some of those rates going up, it doesn't mean it's going to stay there, because we see in August, it continues to do a bit of a dip. And as we stated before, the 5-year fixed rates do work alongside with the same charts we're seeing with the Bank of Canada. However, they do work independently, but they essentially do work in the same path together. And looking at the yield curve, which is essentially taking all of the bond yields. We're looking at the 1 year, the 5 year, the 3 years, the 10, the 15, and so on. Now, if you're in the market to get a mortgage in the next 3 to 6 months with how the bond yields are performing, I highly recommend that you get a rate hold put in place. This is essentially when you're working alongside with a mortgage broker who's communicating with the lender, and they're able to promise you a specific date or a specific rate at that date. This means when you're working with a mortgage person who's going to be communicating and working with the lenders, they're essentially going to be able to protect the interest rate that you have at that current time. In the event that the mortgage approval process takes longer, you'll be able to be approved for the rate at that time instead of, let's say, it goes up another 0.5%. You won't have to pay that additional amount. Now, when the yield curve is inverted, it is the best time typically to get a fixed mortgage. Now, there's an indication where if you see that 5-year rates are actually cheaper than getting a 3-year loan, then that's your indication to go within a fixed mortgage. As you can tell to the illustration, it is a great inverted yield curve. And as you can see, the shorter term rates are actually cheaper than the long term rates. And essentially means at this point in time, it's better to look at a shorter term mortgage versus a longer term mortgage. Given that the 2-year rate is substantially higher than the 10-year rate. Essentially, this chart is telling us that now is a good time to go about locking in your mortgage. And as we had heard from the Bank of Canada, they're expecting to continue to increase interest rates up to 2024. And we're in a very interesting economic standpoint right now, given we've got what's going on with the oil in Russia, we've got the interest rates rising, we've got property values dropping, we've got high inflation that's really impacting everything that's taking place and really having a hit in what's going on with a lot of these charts. If the Bank of Canada continues to increase their interest rates while the 5-year fix continues to stay the same, you could essentially get a 5-year fixed mortgage become cheaper than the variable, which usually is the opposite way around. At a time, you're looking at fixed rates being 4.25 while variable were 5.25%. This essentially means that you'll be able to borrow long-term money cheaper than essentially short-term money. At this point in time, it looks like looking at the longer-term mortgages could actually be a better benefit than going with the 2 and 3 year, given that the cheaper costs associated with them. Now, maybe not look necessarily at a 5-year fixed rate, but you could look at what's going on in the market, the 3 to 4 year fixed rate mortgages, and see what makes sense for you. In a nutshell, it's essentially going to come down to what you can actually sleep with in terms of your risk tolerance. Are you open to waiting things out and knowing the interest can continue to rise and not lock in now, maybe wait for a variable down the road? Or do you lock in now and take the rates that's taking place right now? It really all depends. But currently, the way it is, it does appear that it is going to continue to rise. So it's something you need to know in consideration. Now, it all depends on your risk profile. So it's something that you, like I mentioned before, you want to speak to a mortgage specialist, someone who is fantastic in the field, who's going to be able to give you the different options and let you know what is the best option at this point in time. And essentially, you make the decision as to what you're able to take on from a risk perspective. It looks like the Bank of Canada, as well as the Federal Reserve, is ready to take Canada and the United States into a recession next year, probably over a 99% chance. And depending how the recession goes, at some point, interest rates are going to have to go back down. They're not going to continue to rise forever and ever. So based on where we are right now, it's essentially going to be at a point to stop inflation. Once inflation is gone about being stabilized, there's a higher probability that they're going to go back to slowly dropping down closer towards the 3 to 4% range. And a key thing to remember here, that if we're noticing that the variable rates are continuing to move at a faster pace than the fixed, it makes a lot more sense to lock in your mortgage, as we all know. By locking in and seeing the variable rates are rising steadily over the fixed, it's going to be cheaper, especially for a long-term time frame, especially if rates continue to increase the way they have in 2022. And of course, there's always that chance that interest rates can continue to rise the way they did in 2022, making it a lot more unaffordable and a lot more pressure financially to make those monthly mortgage payments. I hope this video is super helpful, insightful, and gives you all the information that you need to know, whether you're looking to go with a variable, a fixed mortgage, looking to ride it out, or lock in your mortgage at this current time. I'm Josh Savaris, investor and realtor with eXp Realty Brokerage. It's so great if you can help us out and hit the like button, hit the subscribe button, and hit the notification bell to get updates on our newly uploaded content. And if you want to invest in real estate with great cash flow in the US, great appreciation, we're looking at cash flow of over $800 a month, upwards of over $2,000 a month, depending on type of projects that we're looking to invest in. Let's book a call, let's partner together, joint venture, let's build our portfolio, get you closer to your financial freedom. Also, if you're looking to invest, purchase, sell anywhere around the world, please let us know. We have access to tons of real estate agents internationally because our brokerage is actually a digital brokerage. We're able to work with people all over the world. We're talking about everywhere in Canada, US, Europe, Africa, China, India. We are borderless. So if you're looking, or you know someone who's looking to purchase, sell, invest, lease, anything of that sort, please let us know. We'd love to help you out. Josh Tavares, investor and realtor with eXp Realty Brokerage. Take care.